think knowledge up front is probably the least. Like you can always learn more along the way. Like without that spark, without that action, like you're not going to get anywhere. I think a lot of people will put in a couple hours into something and expect, and they get upset when nothing happens. I mean, I probably put in like 80 to 100 hours a week for months and months and months and months and had nothing happen. And then got my first deal under contract. And then I kept doing it. That's how you get stuff done, is you put in the time and you take action.
This is episode number 02 of the Multifamily Success Stories podcast.
Hey, this is John Bell
and Julian Sage.
And welcome to the Multifamily Success Stories podcast. This is a show where we talk to multifamily investors about their journeys and starting and growing their real estate empires.
Our goal is that you'll be able to walk away not only inspired, but with practical information to help you in your real estate journey.
Since we are a new show, please go over to iTunes and leave us a review and let us know what you enjoy.
And if you haven't done so already, go on over to our Facebook group, the Multifamily Success Network, to connect with the community. Hey, what is up, deal makers? I am super excited for this week's episode because we had the special honor of speaking with David Toupin. David is the co-founder of Obsidian Capital, an Austin-based real estate investment firm. In this episode, we talk about how David started investing at the age of 19, where he bought his first property while still in college, a 12-unit apartment complex. David shares the story of his first deal to him scaling and acquiring multiple million-dollar properties. And by the age of 24, David was acting as the key principal for over $50 million in real estate holdings and has raised north of $10 million of capital. In this episode, you can tell that John is really blown away just by the amount of action. And what I really also love about this is that David, when asked about his age and, talking about that, obviously he's a young guy, but that does not stop him. And he doesn't look at that as an obstacle in his way. I think there's a lot of people that maybe feel like because of their experience or because of their age, whatever their background is, that's stopping them from being able to go out there and take action. But that's why being a part of the Dealmaker community is simply that you have to go out there and take action. And that's probably something that you're going to hear time and time again on the show. This is a great episode for those that are young or old and feel like maybe there is something stopping them, some limiting belief, maybe that's age or whatever you personally think is holding you back from being able to go out there and just do what you need to do. David wasn't born with experience or with a lot of knowledge in the space, but listening to David's story, you can hear that he didn't have all the answers, but what he did do was go out there and take massive action. If you like my show notes for this episode, go to multifsuccess.com/EP02. Or if you like my show notes sent directly to your inbox every week, then go to multifsuccess.com/show notes. With all that being said, on to this week's conversation. Hey, what is going on, everybody? Welcome to the Multifamily Success Stories podcast. Today, we have the special honor of speaking with David Toupin. David, would you please introduce yourself and let everybody know who you are and what inspired you to get into multifamily investing?
What's up, everybody? Thanks for having me, guys. I'm Dave Toupin. A little bit about me. I'm a multifamily real estate investor, co-founder of Obsidian Capital, real estate investment firm based out of Texas. We buy and build apartments. I started when I was 19. I'm 24 years old right now. In the next couple months, after another closing or two, I'll be just under 1,000 apartments bought as a general partner under my belt, and constantly growing. So what got me inspired to get in this business, man, I always had big goals and big dreams, and I didn't want to be average. I knew I was an entrepreneur. Real estate really interested me, and I hated single family. I started off doing like wholesaling, and I hated it. This is like another grind to me. So I figured, why don't I just jump right into the big stuff? And so I started, I guess, relatively small with a 12-unit apartment complex when I was my junior year in college. I just turned 20 and I put it under contract. I had like a couple grand in my bank account. I did not have the ability to close on this thing. And I just kind of figured it out. I raised some money. I put the right people together. And then, obviously grown a lot from there. So that's kind of the origin story.
You've had a very short but successful run. One of the things that we like talking about on the show is, going back to, before you found multifamily syndication and before you even started this company, that first few flips that you had, what was your mindset going into real estate when you first started to where you eventually became where it's like, okay, I don't want any more of this fix and flip. I want to stick with, multifamilies.
Yeah, so I was in college. I was studying finance. I had done some internships in investment banking and consulting. And so, I'd learned a bunch about financial side of things, but I didn't really like that corporate route. That wasn't the way I wanted to go. I'd been listening to podcasts for like a year at that point, reading books and just so intrigued by real estate. I got my license. And so I thought that just like in the beginning, I thought I had to go get a high paying job and then I could go into real estate. And then I was like, oh, I don't need to do that. There's other people that have gone right into it. So I was like, okay, well, I need to go into single family first before I go into multifamily. And that was just another limiting belief that I had. And so I started off doing some wholesaling. And for me, it was just like, it wasn't fulfilling. It's like a grind, working on small deals and trying to get $3,000 to $8,000 checks. And it takes a ton of time to build up a pipeline. It's like, that's not going to set me up for my future. I mean, some people do very well and make a ton of money wholesaling. That's great. But for me, I wanted to build wealth. I'm thinking like really, really big in the future. And so for me, that was, okay, I need to make a jump into commercial and multifamily properties now. And it's going to be more of a long-term play as opposed to short-term cash in my pocket. And so that was kind of the mentality there when I made that jump. And then I just cut off single family altogether. I was like, screw it, I'm done. No more single family. If I do a deal, my next deal is going to be multi.
Wow.
And so that's what I did.
So how much was that first property? You said it was 12 units. Where was it and how much did it cost?
So I was in Michigan, Metro Detroit area, a city called Garden City. It was a 12 unit and I bought it for like $550 or something like that, $540, $550. So it was like 40 something a door. C-class property, nothing special. I bought it from a broker. Actually, at the same time, like a week after that, I had gone under contract on another 12 unit on the same street with a different broker. So I closed the two deals pretty much simultaneously, 24 units. That was the first deal.
Before you even got to that, though, how many like fix and flips or how many properties were you doing before you actually got into multifamily?
Wholesale.
Wholesale.
I mean, wholesale, I did like 7 or 8 deals maybe. I did not make a ton of. I mean, it wasn't. I wasn't a lot. I did it for like 4 or 5 months, and I went straight into apartments. It was a very. I blacked that period of my life out. So.
Did your buyers list for your wholesalers that you kind of built up during that 4 months, were they part of your investment group when you first bought those 2 properties?
That's a good question, actually. Yeah, some of them some people that were local rental owners and fix and flippers ended up investing with me, 25, 50 grand on their first deal, the first 2 deals. So, yeah, that was kind of the start of like my investor list, actually.
That's good. I mean, technically you kind of needed, I guess, that little bit of just that little bit of experience just to kind of push you over the edge. But you really did. You jumped off the cliff. I mean, wow, that's a lot of apartments to go right off, right?
Yeah. Yeah, it was a little scary. But I mean, I was actually like really unfazed at the time. I was like, if anyone out there can do it, I can do it. It doesn't matter how old I am, it doesn't matter how much money I have. Like, other people have done it. There's no reason I can't. So it was all kind of about like diving in head first and saying, I'm going to figure out the rest later. So
and part of that, a lot of people say like, oh, you have to have experience before you can go and actually start, getting these deals together. How did you structure your first deals? Not having any prior experience, did you come on as as a JV, or were you structuring all these yourself?
Yeah, it was a full syndication, structured the whole thing. It was like an 80-20 split with the investors. I charged some acquisition fees and whatnot. So it was a full-on, 506B syndication. All the documents, PPM, operating agreement, the whole thing. And I really didn't know much about that before I had gotten that offer accepted. It was kind of like, okay, now that I've got the offer accepted, I've got to go talk to some attorneys and figure out that side of things. And I've got to talk to some banks and figure out how I'm going to finance this. And now I've got to find some investors because I need money to buy it. So it was one of those, like, you kind of it's like hectic, right? You're doing 10 things at once, just trying to learn and figure it all out. But for me, that's how I learn a lot is by doing that. Is not by really reading books as much or listening to podcasts. It's more like learning from other people, mentors, and just doing it is how I learn. So
I think one of the big things is, people, they like you said, they study a lot, they listen to a lot of podcasts, but then they don't make the moves or they don't actually do the things. What do you think what was the big differentiator between maybe you and what other people that are listening to this stuff but aren't actually going and doing, what it is that they want?
that's a good question. I wish I had like the serious answer, because I would be preaching it to the world, and I think it would change a lot of people. But I mean, dude, I think the number one thing is fear. Some people are too afraid to start and to take a little bit of a risk. To me, maybe I was too dumb. I was too naive and young that I didn't even see the what risk is in front of me. But for me, it was like there's no option but to succeed. So I don't know. It's a tough question to ask. I often answer that question by saying maybe I wanted it more than they do. I think a lot of people talk a big game and they say they want something, but if you really wanted it that bad, you'd be making it happen. So how bad do you want it?
What were some of the things that you were doing to make it happen? Like, what were some of the obstacles that you faced with that first deal?
Yeah, so I think, if we're talking in that same context of like why a lot of other people maybe don't go in and take the action, a lot of people, I think it's very shrouded to someone, and it's very like it's unknown territory, it's uncharted territory, right? You've never syndicated a deal before, you never bought an apartment complex, so it's like, wow, how does this work? It's kind of like where I'm at now, where I've syndicated a ton of deals, but now it's like I'm doing some new development, and it's new to me. And so it's like, man, I've never done a new development, so I don't know all the little intricacies and the steps and the mistakes I'm probably going to make and all that. But I'm not going to learn it unless I do it. So it's like a catch-22. So I think for a lot of people, they ignore that it's really much more simple than they think. To buy an apartment complex, first step is you've got to make an offer. To make an offer, you got to know some brokers or talk to some sellers. So go talk to some sellers, talk to some brokers. Then the next step, learn how to underwrite a deal. To know what price to offer, you need to know the numbers. You need to know the financials. So that was the part that I think I was good at. And I think what got me over that fear level or that hump of being uncomfortable to being comfortable was I'm a numbers guy. So I really understood, like, it's very simple to me. You got 12 units that are renting for 600. That's $7,200 a month. I can get them up to $700 a month, right? So that's $8,400 a month. So multiply that by 12 months, 50% expenses, use your cap rate, you kind of figure out where the value's at and whatnot, what your cash flow is going to look like. And you just kind of play around with those numbers on a spreadsheet. And you really get to a point where you get comfortable with how this thing might operate. And in the beginning, you run it by a mentor, run it by somebody who owns apartments. I was doing an internship in investment banking firm. One of the partners owned apartments at the firm. I would sit down with that guy once a week and ask him a bunch of questions about his apartment buildings. And then I started looking at deals. I would sit down with him and say, hey, what do you think of my analysis of this? And he would teach me. And so I think that getting over that hump is like, do you have the wherewithal or the want to really go and figure it out? And so I think, those are some of the little hurdles that I saw getting into it, and that got me over that fear level. So yeah, I think that's you gotta have that want to figure it out.
And now, when did you officially kind of found this Obsidian Capital? Was it after the first deal, or when did you feel like, okay, I need to set up a team to help support me, scale this?
Yeah, it was after my third deal. I done the 12 unit, and I did a 96 unit, and then after that was when I started Obsidian. I met my current business partner on Obsidian is Glenn Gonzalez. He owned about a $300 million portfolio of apartments here in Texas. Sold them all off. Wanted to build. We met at good timing. He's a really good, genuine guy, became a mentor of mine. And we said, hey, let's start a business together. And so started Obsidian in 20, late 2018, early 2019, I think it was. And so after that, I moved down to Austin, which is where he was at. And we've started growing a team. We've got 4 of us now. And so, just building from there.
Sweet. Great story. Definitely. Did you meet him like at a conference, or how did you guys like really just find each other and meet and just started collaborating?
Yeah, we met at a mastermind. It was with, you guys know Rod Cleef?
Yeah.
We were to Rod Cleef. Good buddy of mine. I was at Rod's, he has a multifamily boardroom is what it's called. He has a pretty big multifamily mastermind. And he let me come to the first one. I was like the youngest guy and probably the least experienced in the group, but he let me come, and that's where I met Glenn.
How do you position, how did you position yourself? Did you feel like you were confident in creating a team, or was it because of, the support of a mentor that you felt like you could move into this direction?
Well, I definitely would have gone forward either way. I mean, I was already looking at some pretty big deals. I had already closed on several deals and raised a decent amount of capital at that point, maybe like raised like around $1.5 million, $2 million bucks. And my third deal I did, I think was the most monumental for me in debt confidence, because it was 96 units and a house tacked it. So I bought it. I raised the money. I moved on site into one of the units, and I self-managed the whole thing. I had 2 on-site employees, a manager and a maintenance person full time. I managed them, and I literally day in, day out lived apartments and management and finances and operations and maintenance. And I managed the whole $500,000 renovation. And so that was huge for me. And so I think doing that and having that experience up to that point gave me the confidence and the ability to go to somebody like Glenn, who had a huge amount of experience. He had 4,500 apartments, and say look, I'm ready, I'm willing to be your business partner, and I know I can add enough value to where, it's going to help you as much as it helps me. So that was, I think, a huge turning point for me, because I wasn't able to qualify for loans, right? And I didn't have the track record that he had. And having that combination between the two of us, and I'm young, I know I'm really good with a lot of technology, social media, that type of stuff. And so we both bring different things to the table, so it's a very good synergy.
That's good. I mean, it's great to find balance with your partnership, right? I mean, finding the right partner in business is sometimes very hard, and it can inhibit a business from even progressing in the way that you guys have actually done. It sounds like you were already jumping off the cliff off of very high points. I mean, we did 12 unit, 96 unit. Oh my God, that's crazy. So you were definitely on the path of just exploding on your own. So it's good that you found somebody else that could marry up with it and just increase that tenfold. So from all of that, is there any pitfalls that you guys have fell into, or you personally, that have scared you or maybe taught you a hard lesson that you won't do certain things anymore?
Yeah, I mean, probably more than I could count. I mean, you definitely, I don't think there's a single entrepreneur out there that doesn't go through a bunch of stuff. And so, I mean, I remember I'm very fortunate. There hasn't been one major thing where I've lost a ton of money. I mean, to date, cross my fingers, I've hit every distribution and every property, and we've done very well for our investors, and things have gone overall generally very well. But there are a lot of little things, right? Like the first time I tried to raise capital, those first couple of deals, I did it all wrong. I was a terrible capital raiser, probably the worst. I mean, I would put all the junk and the details and the financials and my underwriting model and photos into a Dropbox link and send it to a bunch of investors, expecting them to browse through it all and make a decision based off of stuff they know nothing about. And so it was no surprise that 95% of people turned me down at first. And it wasn't until after oh, boom, light bulb, maybe I should make a really nice looking PDF offering memorandum with pictures and visualization and details in one simple to comprehend document that I could pitch investors with. And it's like, wow, that's just such a complex idea. It's not. It's simple, but I messed up. And so things like that, and you lose investors over stuff like that, and it's okay. Going into that third deal, I didn't even know what you guys know agency lending, right? Freddie Mac, Fannie Mae, this type of financing institutions. I didn't even know what that was going into my that third deal. We ended up using a Freddie Mac small balance loan. I had only worked with banks before, so that's one of the most but Freddie Mac is one of the most common lenders for a stabilized multifamily deal. I had no clue what it was. I started Googling how do you finance a multimillion-dollar apartment complex, and then it's like, wow, So I lost a big deal. It's actually 3-4 months ago or 5 months ago in January, which we actually 360 come back a couple months later. I actually got the deal now, but I lost the deal before. And why did I lose the deal? Is because we were a little too slow. We were fighting over things in the contract that really didn't matter. We were getting nitpicky on, terms and like title review and contingencies and little things that just shouldn't have caused that. And so, fortunately, we came back around and we got the deal, but it was a great, great project that totally blew up and fell through just because we took too long. A broker got to the seller that was not involved with the deal and told her she could get more money for it. And so she pulled out and said, see you later. And so, there's a lot of things like that, just little mistakes that you learn. It's like, man, maybe I need to be a little bit quicker. Maybe I need to be a little bit less picky on some things when you've got a really good deal in your hands. So just a ton of stuff like that along the way.
Your first couple deals, they were smaller. Was that something that you were able to easily manage yourself? And how did that change when you had to scale up and you're going for that 98?
Yeah, I self-managed those first 3 deals I did, all 120 apartments. Hated it. It was terrible. I don't self-manage now. Management, I think, is just a pain. Unless you have a couple thousand apartments and you really build a team around it. Management's not a profitable business for almost anyone. It's very not. It's not profitable, and it actually is even worse than that. It's a thankless business, and there's a lot of pain that comes along with it. So shout out to the people who run big management companies, because I have no interest in that. Did self-manage it. Great learning experience, though. I learned a ton. How to lease up a unit, renovation costs. I'll tell you, one time when I was living on site at that 100-unit property, my on-site manager who does all the day-to-day, bookkeeping, entry into the software, leasing, manages a maintenance guy, all that stuff, she quit like the morning of. And so the guy Dave hops in the office, and I take over for the next 2 months while I really find someone that's good for the job and that could replace me. So I was in there doing all the bookkeeping, the leasing. I leased some of the highest rents on the property, which was great. It worked out well. I learned a ton, but management is it's not a fun position to be in my opinion. So since then, we've switched to any third party on everything.
Out of those initial 3, do you still own any?
No, I've sold those all. Yeah, I've sold my first 5 deals actually. So, yeah.
Would you like to turn vacant units into cash and earn up to 3 times more per door without having to do any extra work yourself? We offer fully managed short-term rental solutions for multifamily investors. Go to managedbylux.com for more information.
What about one of the first deals that you kind of did as a group or as a new business with your new partner? What was that first deal kind of like?
Yeah, so you make a good point too that I thought of something. What we did before we fully partnered on Obsidian was we did like a trial run. So business partner is like a marriage.
Yep.
When you're really involved with somebody, you've got money involved, there's a lot of decisions. you really want to make sure you're on the same page with the other person. And not only do I mean in a business sense and your goals and what you want to accomplish, but also your values and your morals. And I think, you know, people's character really shines when you actually get them in a certain setting and you're working on a project together, a deal together. So Glenn and I decided, hey, let's do a trial run first. We'll buy a deal together, but separately before forming the company. And so we bought 160 units in Houston. And the deal went really well. We had great synergy, worked well together. We closed it on time. We used a crowdfunding company for that. It just went really smooth, and we worked well together. We figured out like what he's good at, what I'm good at. There are all these little problems that would come up along the way that he's like, oh, I've been through that before. I've done that before. I'll be taking care of it. I got it, you know? And so I just learned so much and absorbed so much by listening to the guy. And so it was great. And I ran most of the transactional side of things, you know, managing the process with the attorneys, third-party reports, the equity funding and the financing and stuff like that. That's what I'm pretty good at. So I managed that side of things, and it went really smooth. And he enjoyed working with me. We had a blast. I did it. He was in Austin and I was still in Michigan. This is before I moved in. So we did it remotely, but it went really well. So we actually sold that deal within 6 months of buying it. That's the quickest turn I've ever done. And we did very well on that deal. So.
do you I mean, a lot of people would look at like where you're at and they'd just be like, you know, I mean, you're at such like a young age, and you've experienced and done a lot of things, but you're still, you know, young enough that you're still learning. Do you feel like there's still a lot more for you, or there's things that like you need to try, or that you haven't yet experienced, or do you feel like you've kind of seen the gambit?
I think the cool thing about real estate is like a lot of it's very similar, but at the same time, there's something new that happens around every corner. Like every deal I do, there's a new problem to deal with. There's a new, you know, scenario that comes up. And so I learn something different every day. And every day there's probably a time where I put my foot in my mouth and I figure out what to say, what not to say. And, you know, it's great. So I think that's what keeps it fun and interesting is that there's always something new to learn. You know, you never know everything. And especially in a time like where we're at now, coronavirus, the guys that have been in the business for years and years and years, now all the financing's changed up and equity and stuff like that is different, right? In just a period of 2-3 months. So you're always adjusting and having to learn new things for sure.
And where do you see going forward? Have you kind of identified your niche or the thing that you just want to focus 100% on, or do you feel like there's still so much more potential and things that you haven't yet experienced that you want to go and try new stuff?
Yeah, I mean, my main course is still value add multifamily. We're closing on in the next 2 months about 400 units across 2 different deals, and we're breaking ground on a 50-unit ground up development here in Austin. So between those 450 or so units, our goal is to buy another 550 by the end of the year. We want to buy 1,000 units this year. So I'd say over the next 5 to 10 years, buy 10,000 apartments is the goal. I think it's achievable. And aside from that, what I'm really focused on as well is a software company that I just recently started. So between those 2 things, that's going to keep me busy.
What's the software company? Is it somewhere around the space?
Yeah, directly related to apartments. I've created a spreadsheet, and this started back from when I did my first deal. It was like 1 page, and it's kind of evolved into a pretty sophisticated financial model for apartments, syndications. And somebody approached me like a year and a half ago. I was like, can I buy this from you? It's like, it's not for sale. It's my model I use. And they're like, well, I'll pay you $200 for it. So I was like, okay, you can have it. And so I put it on my website, and lo and behold, over the past year and a half, I've sold like $70,000 worth of a spreadsheet with like completely word of mouth. And so it's kind of blown up in the multifamily space, I'd say. And it's something I've been thinking about for a long time was how can I, you know, you guys may attest to this and a lot of other people in apartments will. A big hurdle for a lot of people that want to at least get started in apartments is the analyzation aspect and the underwriting, the numbers. Not everybody's numbers person. Not everybody likes Excel or as weird as me and likes Excel, right? So it's a big hurdle for people. It's a problem. And there's not really a solution out there. So I sunk some money back in September, October of last year, getting an initial MVP of a software built out. It gave me a bunch of great ideas on where I want to take it. So basically, it's going to be a multifamily acquisitions platform where you can fully track all the deals you're looking at, underwrite deals start to finish in the software, make offers, eventually get funding and financing and everything. And so I've got about $1 million angel investment lined up, and we're going to be launching by the end of this year. So I'm very excited for that.
Nice. What is that called?
Real Estate Lab.
All right. Well, we'll definitely be on the lookout for it. It might want to call you back just to kind of give a demo about it.
Yeah, for sure. We'll do it when it launches. We'll do a demo. That'd be great.
What are some of the things that you would do differently? Do you feel like if you could restart, what would you do differently if you had to start from scratch?
Knowing what I know now,
right?
I would have bought every freaking property I saw for the last 3-4 years, except in 2019. But I would have bought every property I saw in 2016, 17, and 18 because I'd be mega rich right now. But honestly, if I really could go back, I don't know if I would have done much differently. I think I'm pretty focused in general, but there were definitely times where I was unfocused and strayed. And at one point, I was for a couple months, I spent a ton of time looking into senior housing. I wanted to do a senior living development. I thought that was a great, it was a great business model. I know people that make tons of money doing it, and so. But I probably wasted a bunch of time doing that when I really didn't need to. I would have probably structured a couple deals a little differently. I made, and I'm very happy I did. I made my investors a ton of money on some deals that I've sold. I made a ton of money on them as well. But knowing what I know now, there's certain ways to structure it where I could have put in more hurdles to where if I hit a certain threshold, we could have made more. But that's not a big deal. I'm really happy how much money I've made my investors because that's why they keep coming back. So a lot of different things. I probably would have gone harder on social media a little earlier, but I feel pretty good about that too. So it's just a process, and everyone's got to go through it. So I wouldn't take back any of the mistakes I made because I don't think I'd be the person I am right now if I hadn't gone through them. So.
What are some of those objections that you've had to face while being a young investor and approaching other investors that have been in the space maybe for a longer time? How do you handle all of those objections to be able to prove that you can do the job?
Yeah, I mean, maybe they just don't say it to my face, but I've yet to, in the past 4 years, I could probably not even count two scenarios, situations where somebody's brought up age. I really couldn't. And maybe it's because I don't focus on the age part, but I really don't think that age came into play. I think people see that I know what I'm talking about when it comes to the financial side of things. And if you are confident, I think it comes across as, people, will trust you. So I get asked this question a couple of times a week on different podcasts, and it's a tough one to answer because I think if you kind of ignore the fact that you're young and focus more on the actual business and learning it and mastering it, people don't care that you're young. Actually, I think they like it more. People like my business partner loves working with me. I'm half his age, but I keep him young. I bring a lot of energy to the team. So, investors, I have a lot of investors that are twice my age and multi-millionaires, and they enjoy working with me, and we have a lot of fun and have built some really good relationships. So I'm not quite sure that I have had a lot of objections from being young, at least to my face.
Yeah, I would say when the numbers work, the numbers work. It doesn't matter who's presenting it, right?
Yeah. You guys are both young, right? How old are you guys?
I'm in my 30s.
25.
Okay. Still young. And you're 25?
Yep.
Dude, being young is your greatest advantage.
Yes.
It is the number one advantage.
Why do you say that?
I mean, first of all, time. You got a long runway, bro. You got a long runway. And so people, anyone who's twice your age or more, like they're just wishing they were, back at your age, because they would have that long runway. And to know what at 25, to know, or even in your 30s. I mean, you guys know Grant Cardone, right?
Yep.
I don't think he bought his first apartment complex till he was like 38 or 40.
Right.
Look at the dude now. So my business partner, Glenn, bought his first apartment complex when I think he was probably in his early 40s. He's 51 now. He bought 5,000 apartments within a 7-year period. So it's like, dude, you're 25.
Right.
Imagine what you could do over that time period. You're in your 30s. Imagine what you could do. So the time thing is huge. And then just, I think people that are older and more successful enjoy working with young people. That 96 unit I bought, I think one of the most important reasons why he sold that property to me, because he sold it to me for $4.2 million. He probably could have gotten closer to $5 million if he put it on the market. And I sat down with him and asked him after. I said, "Why'd you sell it to me for that price? You didn't have to do that." After I'd already closed on the deal. And he told me, this guy, he owned over $1 billion in real estate. I still to this day don't know why he picked up the phone when I called him. He told me that he liked me and that I reminded him of himself when he was my age. And that's why he did it.
Good.
Dude,
right.
Young. Nothing wrong with it. It's only an advantage. There's no disadvantage.
All right. So just a quick break. What David is really talking about here, he is talking about the curve in which we all get started and then seeing that curve rise rapidly just because we started earlier. Again, if we were to start these things in our early or late 20s or 30s, we're able to increase our overall earning potential just because we got our feet going quicker, faster than what we would normally do. If we wait until our 50s, your potential for earnings are a little bit less, but you might have a little bit more money to invest. So the curve is still lower, but it still could grow exponentially. How did you feel about going to college, knowing what you knew and what you wanted to do? Was it beneficial? Was it like, I really don't want to be here, but my family's kind of like pushing it?
Yeah, dude, college sucked. College is awesome. I had a blast the first 2 years. But I originally went because I thought I wanted to be a dentist and follow my dad in his footsteps. And I studied biology. And then I was like, I don't really like this. I feel like I'd always been an entrepreneur. I started my first business when I was 13. So I was like, school wasn't really my thing. I was a straight up C- student. I did not get good grades. And I probably spent my last 2 years of college skipping 60 to 70% of my classes so that I could build my real estate business. So I did not learn anything in college that translated over and helped me in real estate. I'll say that. Was it worth getting the degree? 50-50.
Yeah. I from the same kind of.
It's situational.
Yeah. Like I just like you, I started businesses way early and it was
nice.
It was almost a bear to kind of just go to school. Like it was a slowdown. It was like, I got to do this, check this box. And my mom, like I got my associates. My mom made me walk to get my associates. I was like, nobody does this.
Nobody does this. That's so awesome. I felt the same way.
Bachelor's, I just got it in the mail and I just gave her the thing and I'm like, here you go, open this. And there's a degree, right? And she's like, well, you didn't go walk. No, I wasn't going to do it. I'm over it. Not going back.
I don't even know if I picked up my degree, to be honest with you guys. I think it's still at the school. My mom keeps bugging me. She's like, yeah, I'll get that degree. I'm like, yeah, all right, I'll get it at some point. I don't know. It's school's I hate school. Like you couldn't pay me any amount of money to go back to class, dude. I'm telling you that. I like working. I'm in the field, you know.
Yeah, so. I mean, I think when you got the spark, it's something that should be skipped. For some, it's beneficial, so they can kind of get it and develop a skill. But for some people, it hurts to just sit and not do what you really want to do.
Why spend $100,000 on something that's not really going to help you if you know you're an entrepreneur? Use it. Yeah, go invest it, man. Do that instead, or use it to kind of pay your expenses while you're grinding and starting that business. You know, so yeah. I don't know. It depends what you want to do. But if you're an entrepreneur and you're like cold-blooded killer, like you're going to put in the work and get some stuff done, it's not necessary.
Yeah.
Nobody's ever asked me where I've gone to college. Not a single investor.
I don't know. It's controversial. Every time I talk to people about it, everybody's like, "No, you need school. You're telling people not to go to school." I'm like, I'm not telling anybody not to go. I'm just saying,
You should post this. You're still
Yeah,
recording.
we're
Post
still
it because
recording.
I
I'll
love
post it.
talking about controversial shit. I love that.
Let's do it.
I'm just saying
Those are
that
my favorite questions.
it's a decision that should be made. You know, as a parent, if your child has a certain drive, spark, will, to do something, and you know that if they have the ability to kind of get out there and get going, maybe you don't have to send them to a 4-year school, but you need to tie them to somebody that's a mentor so they can craft it.
Yeah.
But
Yeah.
instead of just, you got to go to this school, I feel like, some of our parents, they're like, hey, you got to go to school, you got to get a
Traditional.
degree and go get a job. Well, I'm like, I don't
Yeah.
know. Yeah.
It's crazy. Oh, I'll tell you what, though. I don't know if I would be here if I didn't, just because of the people I met through it,
True.
like the position it put me in. I mean, I didn't go to like a grade A finance school. I didn't go to U of M. I didn't go to freaking Stanford or whatever. I went to a small private Jesuit school in Detroit. And so it was not a very tough finance program. And because it was not a very tough finance program, I was able to skip class and work around it so that I could work on my real estate business. So, and I did get some good internships through there that led me to meet that partner. I mean, I don't talk about that a lot, but that guy actually helped me out hugely. His name is Ben Rybicki. I still remember him. And he owned like 30 or 40 apartments, nothing crazy. But when I was first telling him I wanted to get into apartments, he's like, well, if you ever look at a deal, bring it by my office. We'll sit down and talk about it. And he went through all the numbers. He's like, oh, this is what I'm spending on mine. This maintenance cost looks a little too high. You probably don't need this much for contract services. This is how you calculate your taxes. And I was like, dude, he just taught me so much. And like, so I don't know. It's interesting, but yeah.
Nice.
What has been, some people might look and say like, what, was there a resource or was there something like, what was the tipping point for you to be able to change your mindset, to just dive into this fully? Was there, were you like brought up with a real estate background, or was it just like you heard a podcast and it just clicked?
Yeah, no immediate family, no real estate people. My family, my dad was a dentist. So I didn't have that. I had a more distant relative that invested in real estate, so I saw that growing up, and I was like, oh, that's pretty cool. And that really led me to read, like Rich Dad Poor Dad. I think that was the tipping point for me. I listened to a podcast. I did Bigger Pockets in early 2016, and a guy that lived in Michigan and invested and flipped a bunch of homes, did some commercial stuff, was pretty successful, became a mentor of mine. Actually, 4 years later to this day, we're great friends. He said on Bigger Pockets, I think they asked at the end of the episode, like, what is the book you recommend? And he said Rich Dad Poor Dad. And, it's such a common book, right? I had never heard of it. And so I read that book and I said, wow, this makes sense. There is no way I'm not doing real estate now. And then I read Grant Cardone, The 10X Rule in early 2016. I still have this notebook. In early 2016, I wrote down, I want to buy 10 units by the time I'm 25, 10 single family rental homes by the time I'm 25. And then I read the 10X Rule. And I have it. I literally have that notebook. And then I'm like, the next day after I finished that book, I started writing down. I used to write goals every day, and I wrote down, I want 500 apartments by the time, or within 3 years. And that was May of 2016. In April of 2019, I closed on a deal that put me up to 520 apartments bought. I hit that goal, 500 units within 3 years of that date. I hit it a month early because I read that one book by Grant Cardone that said 10x your goals. And I started writing down bigger goals, and I hit it. And to me, I think that was monumental. Like, that changed my life.
How much do you think is action? How much do you think is knowledge? And how much do you think is that, that initial spark, that motivation?
I think knowledge up front is probably the least. Like, you can always learn more along the way. Like, without that spark, without that action, like, you're not going to get anywhere. I think a lot of people will put in a couple hours into something and they get upset when nothing happens. I mean, I probably put in like 80 to 100 hours a week for months and months and months and months and had nothing happen. and then got my first deal under contract. And then I kept doing it. And you work 100 hours a week for 4 years straight. I mean, that's how you get stuff done, is you put in the time and you take action. There's no other way, man. It's hard. You listen to Gary Vaynerchuk and guys like that. It's hard work and hustle. There's no secret.
What's one thing that you can pass on to somebody else that is interested, maybe isn't as actionable as you are, but they want to get into the space, but they're looking for some tip or some trick that can help them just go out and just do it?
You want to be in multifamily, the most important thing is knowing the numbers. You have to understand the numbers. Whether you're highly analytical and you're going to be in there running the numbers on the spreadsheets, or you're just kind of reviewing them high level, you need to know the numbers. So actionable, I mean, check out my YouTube, Google online. There's some books out about it, how to analyze and underwrite deals, knowing the financials. Hugely important. I have a spreadsheet. I have a free one and one you can buy on my website that I mentioned. Check that out and learn the numbers. If you want to get into this business, you got to know the numbers.
Awesome. Of course, we'll include everything in the show notes. And kind of wrapping this up, is there, you spend a lot of time on education, and you mentioned some names like Gary Vaynerchuk, Grant Cardone, but is there something that maybe you're reading right now that has maybe kind of shifted your mindset from before even?
I don't really read a lot of books, to be honest with you.
That's supposed to say that.
Dude, you know what? I avoided saying that for a long time. I haven't read a lot of books in the past 2 years. I read a ton of books when I got started. I don't read a lot right now. Literally, I spend all my time like putting deals together. That's like what I love. It's like my passion. So, books. Read Maintenance Man to Millionaire is my number one book. That's my business partner, Glenn, wrote it. It's his first book. He wrote it last year. It's an Amazon bestseller. It's about his story. It's inspirational. It's about his story from starting as a maintenance man in the apartment industry, working 30 years, and finally getting up to the point where he started buying apartments and became extremely successful, and all the struggles and not just the good, but the bad that happened during the way. And so if you want a book to read, Maintenance Man to Millionaire, go get it.
Right. And what's the one action that everybody should be doing today?
Learn the numbers and hustle.
Awesome. What are the numbers and hustle? Like finding out what are the numbers on a particular deal, or?
Yeah. If you want, so talk to brokers, talk to sellers, get the T12 and rent roll. Those are the financials that you need to be able to underwrite an apartment building. Go get those from the seller or a broker, and just start reading through them. Print them out or look at them on your screen. Read through them. Really start to understand how do they flow, how do they work. Learn what's in the income section, what's in the expenses, and you're going to start to see trends on how the expenses flow. I mean, the numbers tell a story. If you see really high plumbing costs, maybe they have old galvanized plumbing at this property. If you see, bad debt increasing over the course of 12 months, maybe they have a bad tenant base, or they put a lot of bad tenants in there recently that maybe they're 98% occupied, but they've got a really high bad debt. They just threw tenants in there because they wanted to sell the property at high occupancy, but they threw bad tenants in there and they're not paying rent. So the numbers and the financials will tell a story. And the more you look at them, the more you're going to get familiar with them, and the more well-versed you're going to be when you see a deal, and the quicker you're going to be able to act on it.
Awesome. Well, thank you so much, David. What's the best way that somebody would be able to reach out to you if they have any other questions or they want to find out more about what you do?
Yeah, hit me up on Instagram at Real Estate Jedi, or you can find me on Facebook, David Toupin, or our website, obsidiancapitalco.com.
Awesome. Of course, we'll include everything in the show notes, but thank you so much, David, for taking time and helping to inspire, but also just give us a reminder that you have to take action. It's not just the inspiration. You gotta know your numbers. You gotta go out there. You gotta hustle.
Amen. Right. No problem, dude. Thanks for having me, guys.
All right. Take care, David. Hope you all enjoyed this episode. If you did, please go on over to iTunes and leave us a review, as that greatly supports the show. And if you'd like to be able to connect with John, the community, and I, then come and join us on our Facebook group, the Multifamily Success Network, where you can connect and make deals with other multifamily investors. Go to multifsuccess.com/community.